morning, good afternoon, good evening, traders from across the globe, and welcome to the 814th installment of Short-Term Trading Live with Oscar Traders. My name is Oscar Carboni. I've come out of the pits on Wall Street where I spent a lot of my adult life down in those pits on that trading floor, and I've come off those trading floors to teach you the tips, tricks, and techniques that we've learned to master down on those exchange floors that tell us where markets should go next. Traders, this video is being filmed on Monday night for Trading Tuesday. That's Jan 17, 2011. Welcome back from our 3-day weekend. Not that we needed another day off after the holidays, but 3-day weekend, it is what it is. We're back to work. It's Monday night looking at Tuesday's trading. As we all know, futures trading is extremely risky, traders. No joke, it could cause substantial financial loss if you do not have risk capital, literally to lose in case things go wrong. And if you do not recognize that a stop is your best friend, you certainly shouldn't be trading futures or anything for that matter. But for you traders out there that recognize the risks, that know, read charts, and use the charts to go forward, and recognize a stop is your best friend, maybe we can do something together tonight. Let's look. Traders, what's on the board? First of all, another green Omni. I love it, love it, love it. Go, green Omni, go. Traders, I'm telling you right now, just like in my last video Wednesday night and Thursday for trading on Friday, there is no way to stop the leg, this bull leg of this market that's coming our way. They tried to sandblast us and then hit us with a wrecking ball with all that news on Friday. And you know what the U.S. market did? I don't care about Europe. Europe's going to be 6 months behind me. I'm aware of that, and I'm going higher. That's what happened Friday. What's happening now, Monday night for Tuesday? The exact same thing, in our technical opinion, has not changed at all from what we told you last week. We expect much higher out of the U.S. stock market at the onset of this year. Now, what's on the board for tonight, traders? I have done many videos for you of this nature. This is one that's going to open up your eyes to things that you should be looking at when you're viewing charts and future price movement, and it is this. Repetitive patterns are the cornerstones of technical analysis, traders. My point is this. If you're looking at a long-term chart and you notice the chart rallies up, puts in a V bottom, rallies up into some sort of a parallel channel, comes back down, puts in a V bottom, rallies up into a parallel channel, comes down, puts in a V bottom, then a parallel channel. This, my friends, becomes a repetitive pattern time after time, right? That is what we study, we look for on top of all the other analysis that we do. We love repetitive patterns because we know that repetitive patterns are the cornerstones of technical analysis. And traders, if you come on down to my site, livewithoscar.com, grab yourselves a free membership. I can show you how this stuff works live, how the analysis applies to market movement going forward. With no further ado, let's go look at some charts. Okay, traders, the first chart before your eyes this evening is the emini S&P, and it is a daily bar chart. The very same chart I've been showing you for the last few videos. You'll recognize there is an inverted head and shoulders here, which then gets above the 200 bar moving average when it creates the right shoulder and goes into a parallel channel. This I've been telling you now for weeks that we love, and we expect this to go higher, and that's what we expect looking at the daily charts. And the daily's good because we are doing this video on Monday night for Trading Tuesday, and the daily chart tells us follow those arrows on Tuesday. Now we're going to step this out a little bit, traders, and we're going to look at some weekly charts because I think that when you see the weekly chart, you really begin to see a development of repetitive pattern trend channels and just simply a repetitive pattern that should repeat once again. This is what I'm getting at. Next chart. We have a weekly emini S&P, the same chart again I've been putting in front of you video after video for the last couple of weeks. The weekly bar chart with the 200 bar moving average. Traders, we have broken out above this apex. Looks very smart. And now we're all the way up here, looking very strong. You gotta love the weekly view of the US emini S&P weekly chart. Let's look at another one, the NASDAQ. Look at how smart this is. The The NASDAQ has now broken out of this wedge well above the 200 bar moving average. And look what it's doing this evening, Monday night into Tuesday. Look at this right here. We're getting above the major resistance. As I draw this on the board, I assure you it's probably higher right now. We are starting to move up. We're now above the major resistance. We've already broken out of that apex or that wedge. This market looks very strong. Now, with the weeklies and the repetitive patterns, here it is, traders. Repetitive patterns are absolutely the cornerstones of technical analysis. And I'm going to break it up into two words so it hits home. The cornerstones of technical analysis, traders. That's what repetitive patterns are. Here is my point. We're looking at a weekly bar chart with data that goes all the way back to the crash of 2008 into 2009. You'll recognize that when we put our bottom in, we did a V-looking bottom and immediately went into a parallel channel which propelled the market much higher. In fact, if you really want to look at this, there were two pretty smart parallel channels here. So this major one, we went into a parallel channel. What happens? We have a major down move, put in a V bottom, and go into a parallel channel. Next, this year, 2011, the one that just passed, we come back down, we put in a V bottom, and begin a parallel channel. Traders, this is a weekly bar chart. This is very long term. This is what happens. After a V bottom, parallel channel. Another V bottom, parallel channel. We've witnessed a V bottom. We are in a parallel channel. There is no stopping the ES from doing this right now because that's what it is supposed to do based upon repetitive pattern recognition. Repetitive patterns, traders, are the cornerstones, if you will, of technical analysis. And go repetitive patterns, because that is going to take us home. Traders, there's my technical argument for the green OMNI once again, trading this week for Tuesday the 17th. Traders, come on down to my site, livewithoscar.com. Let me show you how this analysis applies itself to market movement going forward. You will find me there. Traders, try to keep your emotions out of trading at all times. Remember, this should help you. Say this to yourselves every morning, afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Video number 814. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.